Good morning, everyone. Welcome to our live daily market outlook for Wednesday, 21st of November 2012. As you can see on your charts, actually a lot of movements has been done during the overnight session, late afternoon and overnight. And two main factors that drove the markets are failure to find a solution or to agree on the get the country Greece's debt down to a sustainable level, as well as comments from Federal Reserve Chairman Ben Bernanke that basically pushed the dollar higher, while at the same time euro lost ground and dipped as low as 127.35. As said, Greece's international lenders failed for the second week running to agree how to get the country's debt to the levels that are sustainable, and will have a third go at resolving their most intractable problem in 6 days' time. After yesterday's meeting, nearly 12 hours of talks through the night, during the various options were discussed. Eurozone finance ministers and the International Monetary Fund and as well the European Central Bank failed to reach consensus, without which emergency aid cannot be disbursed to Athens. Comments from Eurogroup Chairman Jean-Claude Juncker, who said that they were close to an agreement, but technical verifications have to be undertaken, financial calculations have to be made, and it's really for technical reasons that at yesterday's meeting of the day it was not possible to do it in a proper way, and so they are interrupting the meeting, and that will continue next Monday. From across the ocean, Federal Reserve Chairman Ben Bernanke said that 2013 could be a very good year for the US economy if politicians can strike a quick deal to avoid the so-called fiscal cliff. The powerful central bank chief said a credible long-term framework to put the federal budget on a sound path was needed, but warned against drastic action that would harm the recovery. Bernanke also repeated the warning that failing to halt the fiscal cliff's 600 billion expiring tax cuts and the government spending reductions could lead to recession, and said the worries over the how budget negotiations will be resolved were already damaging growth. As immediate result, the greenback is significantly higher, while US stocks fell on the yesterday. Comments said the euro is still at the lower levels, 127.35 seen so far. Sterling slightly slipped below 159, but seems that it's regaining ground, while the main winner is the dollar yen that at the beginning of the European session broke above 82 barrier. That was our initial target. Dollar Swiss also regained some ground, and the averts immediate downside risk following a failure to clear the 94.00 as round figure and the 200 days moving average. Now it's at levels at 94.38, providing temporary relief for the pair ahead of possible fresh weaknesses. The overall picture for dollar Swiss is still quite negative. More of this, of course, we will see on our technical part. From the commodities, crude oil gave up most of its gains that peaked at 89.77 2 days ago, dipping as low as 86.16, and basically bringing the price action back into the recent range. Failure to regain some important levels above 89 and basically 90.00 was seen as our next upside target. Now keeps additional pressure on the oil price as a stronger dollar push the oil price lower. Similar situation is with the gold. We mentioned yesterday in our written analysis that any failure to regain 1738, that is a quite strong barrier, would trigger corrective action down towards 1720 level. 1721 1719, pardon, seen so far. This was our initial support, and so far contained the dips. Overall picture is still quite supportive for gold, but quite strong barrier at 1738 acts as a good resistance, and in case of repeated failure there, we might see risk of formation of double top. Of course, we are going to take a look, detailed look into all this in our technical part. Just a brief look to our calendar for today. Okay, as said, key releases today. Some of the events have been moved to today from tomorrow's schedule. As we have the holiday US Thanksgiving Day tomorrow, so as you can see, the crude oil inventories, the University of Michigan unemployment claims are moved from Thursday's schedule. 9:30 we have Bank of England, MPC meeting minutes. It's according to expectations, no change in voting has been seen. Public sector net borrowing shows lower levels in October's forecast, only 4.1 billion pounds compared to 10.7 billion pounds in the month of September. And these are both at 9:30 GMT, and then afternoon starts with America's releases. 13:30 is the weekly jobless claims that are expected to drop to 397,000 compared to 439,000 in the previous week, and 1400 GMT flash manufacturing PMI for October is slight improvement. Is seen according to today's forecast, 51.2 compared to 51, still holding above important 50 level that divides contraction from strength. 1455 is the University of Michigan consumer sentiment that is expected to stay unchanged at 84.9, and the US crude oil inventories are due at 15:30 GMT, 0.9 million 900,000 barrels build is forecasted for today compared to build of 1.1 million barrels in the last week, and these are basically the highlights for the coming for today's calendar. We're going to take a look now at the technical part and see the movements that occurred in the major currencies and commodities and the forecasts for the coming hours of trading. As always, starting with the single currency, the latest dip down to 127.45 following a failure to break 128, clearly break 128. Also marks the 200 days moving average. We have seen 128.28. This is the high of yesterday. Then subsequent reversal driven mainly by the news. Dipped to retraced basically over 50% of the initial rally from 126.60 to 128.28. That softened, of course, the near-term outlook. Hourly studies dipped into the negative territory. Currently, corrective reversal is underway from 127.35. So far, reached 127.68. This is close to the previous lows of yesterday's lows at 127.63. That is acting as initial barrier ahead of 10 days moving average at 127.73, and now attempt of bearish crossover of 20 over 55 at 127.83. These are all quite good barriers, with the negative tone now dominating on the hourly, as well as building a bearish momentum on the 4-hour chart, with indicators, all indicators pointing lower, more focus seen towards the downside, with the immediate supports and targets seen at 127.20, 127 zone. First comes 61.8. Of course, we have the overnight's low at 127.35, then 127.24, 61.8% retracement. 127.14 is the main bull tentative. Bull trend line drawn of 126. 60, as well as daily Ichimoku cloud base that is currently at 127.05, along with the 127 as round figure support, acting as a good support area, but still seen in the near term focus as the near term structure turned negative following a sharp reversal of 128.00. Failure to break this clearly break this level sees now more focus towards the downside. Regain of I would say 128 is required again to turn the shift focus higher and improve the near-term structure. Otherwise, we'll be focusing on downside levels and basically break below 127 is to open 126.89 important support. This is high low of 16th of November, and probably to refocus 126.60 low of 13th of November, as the overall picture is still quite negative, and the pair basically failed to regain 200 days moving average and the neckline of double top at 131.70 and the 131.38, with the daily studies still in the negative territory and still pointing lower, seeing again more risk towards the downside. As well on the downside, also the addition to the support of 127.20 zone is the ascending 90 days moving average, currently at 126.94. The British pound dipped off recent high, yesterday's basically high at 159.35, retraced approximately 50% of the initial rally from 158.26 to 159.35, and dip this morning to 158.82. This could be still seen as corrective, as a brief dip of the hourly studies into the negative territory is seeing now reversing. All indicators are again pointing higher as the price regains important 159 level, as well as 55 and 10 days moving average currently at 159.09, seeing again prospect for fresh rally and leaving a higher low at 158.82, as 4-hour indicators are still holding in the positive territory. This, as I said, could be seen as a corrective action preceding a fresh recovery. Break above, of course, 159.35 is required to resume the recovery of 158.26 and the open immediate barrier 159.59, which is 38.2% retracement of 160.174 to 158.26, and then we have 160 level, quite a strong barrier, main bear trend line of 163.08, as you can see it on the daily time frame, as 50% retracement of 161.74 to 158.26. And of course around figure and psychological resistance. Regain of this level actually could be seen as a trigger for a stronger recovery of the larger down move from 163.08 21st of September peak that so far dipped to 158.26, finding support above 50% of the 152.67 to 163.08 larger rally, as well as main bull trend line of 152.67, as well as 50% retracement. So on the downside we have quite good support that underpins the current action, but as again to repeat again of 159.35 is seen required to resume the near-term recovery and open levels 159.59 and the break point at 160.00. And the dollar yen is, as we said at the beginning, top performer again. Fresh action this morning regained 82.00, 82.10 seen so far, with the bulls being firmly in play on the lower time frames as well as on the daily chart. So we have a strong bull trend of dollar yen that is shown on the latest up leg from 79.20 low of 13th of November that peaked so far to at 82.10. Upside the targets lie at 82.20. These are the highs of mid-May 2011. And then we'll be looking for, and then we have the 150 days weekly moving average at 82.25. This is the initial barrier. Nothing until 83.00 is round figure resistance, and 83 29 high of 1st of April 2012. From the other side, overextended conditions on both 1 and 4 hour charts could be signal of corrective action, yet no any firm signal of reversal, as well as appearance of RSI and MACD bearish divergence that is shown on the 4 hour chart. Also could be the limiting factor for the near-term gains of dollar yen that could signal some corrective action ahead. This is the just indication of this, as the pair still stays in the strong rally and doesn't show any signals of fatigue, despite the both time frames, 1 and 4 hour indicators are well in the overbought territory. Potential corrective action will be facing 82 as that is already tested, 81.70 as a minor support, along with the ascending 20 days moving average, and the more important is 81.58, 81.45 previous highs, along with the near-term corrective action, corrective range floor at approximately 81.00, break of which could be quite risky for the near-term bulls, as this might delay the bulls in favor of some stronger corrective action. I would say at this point, ideally, any stronger dips should be contained above 81.00 in order to keep the bullish structure in play, and as bulls are firmly in play, we can expect further extension higher towards 82.20.25 and then 83.00 seen on the break. And the dollar Swiss averts immediate downside risk following a failure to clearly break below 200 days moving average and round figure support at 94.00, with the fresh rally higher regaining levels of 94.56. This is approximately 61.8% retracement. Let's just make it very clear at this point. Between 50 and 61% retracement of the down move from 95.11 to 93.90 at 94.56, with the corrective action now seen on overbought hourly studies, so far finding support above initial support at 94.27, at 94.33. The reversal has temporarily stopped. Of course, break above 94.56 and more important 94.89 peak of 16th of November is required to reattract upside barriers at 95.00, 95.11, and probably to resume the recovery action from 92.13 low of 17th of October 2012, as the gains so far stalled at 95.11, limits being limited by 38.2% Fibonacci retracement of the larger down move from 99.70 to 92.13, and descending 90 days moving average as shown on the daily chart. Conversely, failure to regain 94.89 risks a lower top and possible fresh weakness, with loss of initial 94.30.20 support, lows of low of 14th of November and highs of 19th and 20th of November, as well as this morning's low, would risk again possible test of 94.00, with break here seen as a trigger for a resumption of a larger down move from 95.11 last week's peak, and the downside targets would be seen towards 93.85 initially, which is a high of 26th of October, and the Fibonacci support at 93.65, 61.8% retracement, seen on, of course, on a break below 94. So far, the near-term structure remains quite supportive, but lack of momentum seen on the 4-hour chart still sees the downside vulnerable, and in case we fail to see the 94.89, then most likely scenario would be lower top and the fresh extension lower. Of course, break below 94 is required to confirm. And finally, the commodities. As I said, the oil again lost the traction of the recent recovery that peaked at 89.76 2 days ago. Basically, it's back to the range of now upper. The range ceiling has been lifted higher to 89.70 zone. Basically, the gains were limited by 61.8% retracement of 93.47 to 84.05 descent, and the price action dips down to as low as 86.16, keeping basically in the previous range, and the previous narrower below the previous narrower range top at 87.20, currently holding just below 87. Soft tone seen on the 4-hour chart, and quite negative, although overextended conditions on the hourly. See potential for some consolidative corrective action, but it seems that lack of momentum to regain higher levels, required levels, basically break above 90 and 90.42 that we mentioned yesterday. See so far no much result of recent break above previous peak and diamond bottom pattern that was signaling quite a strong reaction. From the other side, the crossover of 55 over 90 days moving average puts additional pressure on the pair, and basically further slide below 85 and 84 would again risk resumption of the down move from broader down move from 100.72 and the lower top at 93.47. To improve the structure, we need to see a regain of yesterday's minimum, 2 days ago low at high, pardon, at 89.77, and the regain of 90.00 is to revive the bulls. Otherwise, further range trading with the good support at 85, loss of which would again tend focus towards the downside levels. And finally, the yellow metal, as I said in the introduction, failure to clear important 1738 barrier, that is previous high of 9th of November, as well as Fibonacci 50% expansion of the wave, third wave from 1705. Failed. Basically, we reached our initial target at 1734, previous target, and the 50% retracement of the larger down move from 1795 to 1672, and basically the gains were capped there at 1735.60 yesterday. As I said, failure to hit the initial target at 1739 would likely trigger some corrective action down to 1720. That exactly happened. This is also approximately 38.2%, pardon, 50% retracement of the rally from 1705 to 1735, with the fresh bounce now underway. As the 4-hour chart studies that are quite a good indicator for the near-term outlook are still holding in the positive territory, and still see the potential for a possible stretch and test of 1735 and 1738. We need to see the clear break above these levels in order to resume higher, as we have our targets at 1746, Fibonacci 61.8 expansion, and 1748 is the 61.8% retracement of 1795 to 1672. Failure to regain these levels could see risk of forming a double top and a fresh slide, with the key support now being at 1705, 1700, break of which would be very bearish, and reintroduce again the recent low at 1672. I think that was all from my side. I would like, if you have any questions to ask, you can send them now. Any question? Euro yen. Okay, let's take a look at euro yen. Bulls are in play on the larger picture as the pair remains in a rally from 94.10, posting fresh highs today, basically at 105.05. This is after breaking an important barrier at 104.57. This was the recent range top. The pair was within approximately parity level and 104.60 range. Now fresh strength broke above here, and we might be looking for a further extension higher. Let me just find the larger picture to see where we are standing now with the Fibonacci retracements. Okay, the 104.80 was the 61.8% retracement of the down move from 111.42 down to 94.10 with the break above this level and break above psychological 105. Now seeing more potential towards the upside. 105.05 seen so far ahead of a corrective pullback. Basically the hourly structure is the corrective was seen on the overbought hourly studies. Still more potential towards the upside, although overextended the conditions on the 4-hour chart now could be signal of some stronger corrective action. The previous high at 104.57 that has already been tested yesterday on a dip to 104.08 still sees risk towards the risk of corrective action with the. Just take a look at the levels. Approximately 104 is 23.6% and the ascending 20 days moving average, and basically this shouldn't be exceeded in any case of reversal, as we have also the previous high at 104.00. So far this level contained dips, but any further reversal will be facing static support 103.65 and then Fibonacci support 103.24 reinforced by ascending 55 days moving average. Basically any deeper dip should be in any case contained at or above these levels in order to maintain the positive tone of 100.32. This is the latest uplook from 13th of November 2012. More focusing towards the upside still, but we have to keep an eye on the extended conditions that might trigger some corrective action, with the levels 104 seen as a good support for now. Any further question, please? No, that was all for today. Okay, I wish to thank you all for being with us. We expect to see you again tomorrow at the same time at 8 o'clock GMT, 10 o'clock local Cyprus time. Wish you a nice day and very successful trading. Just to remind you also that tomorrow's holiday we might see some lower volumes in the markets, but this is going to be, of course, subject of tomorrow's session. I wish you a nice trading day and success in your trading. Good luck.